weekend all. Ira Epstein with your weekend edition of your financial market wrap-up. And this wrap-up is for Friday, and we're at the 19th of November, 2021. Now, over the weekend, I intend on finishing my metal report. I wanted, as the day was going on, I said, why don't I get the weekly charts finished up with the weekly close? It means I'll work over the weekend, get the report, and for those of you that are on my mailing list, you'll get a notice as soon as I put it out. It could be Sunday. I'm not sure what day I want to finish it up yet, but I intend on finishing that up for you because I have other reports I'm going to get to during the week. I intend on covering the gold, both also for the SPDR and ETF people, GLD and GDX will be with it as well. And we'll be showing the weekly charts along with the daily charts, and the setups I think are there. Now, today we saw that President Biden, for a brief period of time, turned over the reins of the presidency to Kamala Harris. So we had a female president for the very first time, brief, but for the very first time. So far, I have not seen one thing from the president on his nomination for the Fed chair position, nor are we hearing anything positive other than it in Congress. Certainly the House of Representatives passed the Biden bill. Forget that. What it comes out or whatever happens in the Senate, if it comes out of there with a vote, that's going to be the real thing, because you're going to get a lot of this stripped out. They threw in everything. They jammed it with the majority they have. Just about no Republican, I don't know any Republican that voted for the bill. They couldn't beat that. I mean, they don't have the majority there. But when you step over to the Senate, you got Ms. Sinema and Mr. Manchin, and they are looking at this. And if Joe Manchin is up to his word, how could he possibly vote for the bill if the CBO says it doesn't pay for itself? I mean, the Biden administration has been telling us that. The Congressional Budget Office says, no, it does not. So that's the first thing. Now, maybe you whittle it down where the parts of the revenue stay in place and you're not spending as much. It's going to be horse trading. Forget Chuck Schumer that they're going to get this done by December, by Christmas. Sure. These people are running home for Thanksgiving. They'll come back, then they run out. They'll be here 2-3 weeks, then they're gone for Christmas too. They should turn their attention to the budget. That's what we have to get done, and that's where all the attention should be from that. Then the debate begins on the next part of this bill. As for inflation, it's here. The argument, of course, all you have to do is turn on financial TV. Some think it's transitory, some think it's not transitory. I understand both arguments. I'm smart enough, I think, to say I don't know. I do want to see what happens when the supply chains start filling. Now, the one thing we do on this particular report is we first look at a monthly chart, then everything else is going to be the weeklies. And on a monthly chart of just closing prices, we are up, going home on the 19th of the month, 2% to an all-new record high close so far for the month. When you go to the S&P, you made another record high close today. You closed at 4694.5. And I know the market sold off today, but it's still a record high close on an area chart of closes. Now, when you come to the weekly bar chart and we start putting on the studies, you have higher low, higher high. This week's high of 4723.5 certainly took out the high back here of 4711.75. Where the market is looking for support, well, you got the 18, then you got the 100, 200. Those are way down there. Should the market break through that low of the last week, which was 46.25.25, okay, that would break the pattern of higher lows, higher highs, but this just really got in place. Doesn't have to be broken. Here's the negative. The market's at the upper Bollinger Band. Maybe it sticks to it. That sticky glue, that Gorilla Glue type trade, which it's trying to do. It's 5 weeks in a row there. But I seriously doubt it's going to springboard and run away from it. So there's the negative in the market right now. What about momentum? You're embedded. Let's count the waves. I love when I do that. Both numbers over 80 this week. Both numbers last week over 80, both numbers the week before over 80, not the week before. So you got your 3 weeks in a row. Until the red line closes under 79, This chart says that on breaks, the pros should be buying the market, looking for the higher high Bollinger Band area. In the NASDAQ, it's not the same story. You're first overbought. The trend is up. Like the S&P, you're riding the upper Bollinger Band, and you don't run away from that. I mean, only 5% of the time do you stay above it or under it. So you get over it, then you pull back under. It's a churn. But that's what I'd expect at this time of the year going into Christmas. In the Dow, the market was against that upper band, and now it's pulled back down. Now, if we take a look at the settlement, you had a 79 reading, so the market is now no longer, in theory, embedded. I like to get a reading under 79 because this can easily, with a big up on Monday, start the week going, but you have to get through the end of the week to know where it's going to be. It's a weekly chart. So kinks in the army, not looking as good. Trend up, look for support back here at 35.71. If it does break, you've got to get both the red and the blue, they're called the K and the D lines, back under 70 to get them away from being overbought, or they have to re-embed. In the Russell, excuse me, it's the same thing. You got up to the upper Bollinger Band, you spent 2 weeks over that. You don't stay more than 5% of the time when you had the 2 weeks. If you were up this week, first of all, coming in, you had a 3% chance, the way that I teach charting, of staying over that band, 97% under it. I take each of the 5% of the time, and when you start getting successive closes over a band, I use each one of those pulling away from the 5%. So now 4%, 3%, get what's working there, and that's what happened. In the T-bond market, you bounced away from the 200-day moving average in the lower Bollinger Band. When it was down there, go look at my videos. I said that's where I think the pros are going to cover their shorts. Why not? That's the first challenge of the 200-day average. It's held before. When you hit a Bollinger Band, I teach in my enhanced Bollinger Band course that when you get there, the thing you do is you learn to take money off the table. Were you embedded? No. So the way I teach it, you would have taken all the money. There's one way to keep half your position, the other way to not. I teach it in the course. No, I won't teach it here. Now we get to the 10-year notes. Both numbers are under 20. It's the first thing my eye goes to. Both numbers were under 20. They were not both under 20 back here. You have an oversold market that's trying to give you a bounce. The market is nervous, as I started off this video with the idea of what's going on with COVID. It's rampant. Austria's in a full lockdown for the people that aren't vaccinated. I would expect Germany's going to do the same thing. And I think it's going to happen other places. So I don't think it's going to be limited there. France seems to be comfortable with the fact that they have the ID card, which I wish we had in America, one that really worked, where we're all in the system, and you could show that you're vaccinated, you got 2 of them, you got 3 of them, whatever you've got. There'd be truth in that, I would pray, from an official site. I don't know why we don't do that. I guess it's rights. People don't want to be tracked. In the dollar index, up and well over the upper Bollinger Band in a market that is trying to embed. Both numbers over 80 this week. If we get back to last week, both numbers over 80, and the week before, not. So this is going to be the important week. Will it stay there and embed, which means probably even higher prices, or is this where it gives you the correction back under the Bollinger Band? I can't answer it right now. I can tell you that I know why people ran to the dollar. Beyond that, I don't know. In the eurocurrency, look at how it's just getting crunched. 2 things going on here. Number one, Ms. Lagarde came out today. She's the head of the European Central Bank, and she said, no. Their bank is no way getting ready to raise interest rates. Every day it's full in the papers, and the Fed governor's coming out. Should we raise rates quicker? Today you saw Mr. Waller come out. We should be tapering faster. Clarita, it's same things, okay? They just decided to taper. What's with this? Let's look at December for tapering faster. Why? Let's see the tapering begin, and let's see the impact of it and what it's having on the economy. I do not agree with people that just get nervous about this data. You're going to see a slowdown. We have history. What happened the last time we saw COVID of this magnitude hit? Everything went the other way. It doesn't show up in the data immediately. It takes just a little bit of time. There's a lag to it. In the Canadian, by the way, I don't want to talk fundamentals. I care about charts more than I do anything, but the chart's telling me that story. In the Canadian dollar, trend is up. You just missed that upper band, and now you're back under the 18-day average of chart closes, 18-week average of closes. I didn't mean day. It's a weekly chart. That means you've got the bias down, the trend up, and momentum pointing down. Not a pretty chart. Very hard to figure anything out with. In the Japanese yen, this has been the pattern. We have just been crashing in the yen as it keeps coming down to new lows. I mean, this is a monster. Just remember, back into February, this is a weekly chart, you were once up to the 100 level. You're down to 87 right now. That's a pretty big break and a 17% break in that time frame, and that's where you're at. Gives them an advantage if you're buying Japanese goods, I guess. In Bitcoin, amazing. You just went from 69,355 and suddenly you're at 57,900. So you've dropped $12,000 roughly in the market in a week and a half. You think that's not volatile? That's volatile. The market correcting, present tense, an overbought condition, not in a trend anymore. Got a higher high and lower low. You went up on these patterns, made a new all-time high, and that part of the game is over. What else happened? Well, on the way to the grocery store, you had an embedded reading, both numbers over 80, both over 80, both over 80. Do you agree? Now, when does it get lost? Still embedded. This week is when it gets lost, right here. So if it gets lost the week of the 19th, which is right now, if it doesn't re-embed, where would you think I think it's going? I would say wherever that 18-week average of closes comes in. The differential between Brent and WTI, well, you can see it's widening as we're watching oil prices. They're cratering the other side. What are they responding to? COVID. They're also responding to the idea that China keeps threatening more oil to come out of their reserves. Remember, China also said they're not letting their people go cold. They're not going to let the factory shut down. They're going to use coal, and they told everybody to go out and produce all the coal you can. So they need the energy, and they're going to do everything to break prices internally. And the market's responding, but it's also responding, will there be as much demand for this in the winter? What's going to happen if people can't go to the factories and work? So the market starts saying, what happened last time we had this outbreak? And there you are. This outbreak was well televised, telecast, forecasted. They told us come winter, we were going to see a big outbreak. It's here. It's setting records in different parts of the world. When you look here, momentum down. You lost the embedded reading. Here you were embedded. Now watch this. This is this week. You lose it. What do you want to do? You're looking now for the 18-week average of closes to be hit. Gasoline did it. You've been fighting your battle for 2 weeks, 3 weeks, right at that number at this point. So you put it together, you get a game plan, and you try to stick with it, and that's what we're talking about. So look for me. If you haven't signed up for anything on our website, do so now, because you'll then get on the mailing list, and I'll be sending out the gold invite where you'll be able to go on the website and watch it. Okay, next week it'll certainly be there, but it's only up for 3 days. So once the 3-day period goes by, and I don't count weekends, so you're lucky, then it's gone forever. These reports are meant for now. They're not meant for 2 weeks from now. I'm Ira Epstein. You have a great weekend.